All right, let's dive right into this explainer. Look, everyone is talking about State Farm's absolutely massive $5 billion dividend right now. And if you've had auto coverage recently, you might actually have a piece of that coming your way. But how much? Let's unpack the actual numbers together and see exactly how this works.
So let's start right at the top with that eye-popping headline number. State Farm Mutual is handing out a staggering one-time $5 billion dividend to qualifying auto policyholders. Now, I want to be perfectly clear right out of the gate. This is not some sort of government stimulus check, it's not a tax refund, and is definitely not your standard Wall Street stock dividend. This is a policyholder dividend. Basically, the company had a great year, and they're actively returning money to you based strictly on their financial performance.
And guys, the scale of this thing is just enormous. We are talking about more than 49 million vehicles included in this massive payout. 49 million. That staggering volume is exactly why this story spread like wildfire across the country, because it impacts a huge portion of everyday drivers. But, with a pool that big, that $5 billion headline can actually be a little bit misleading if we aren't careful. Because of that massive scale, you've probably seen the headlines or, social media posts throwing around one very specific number. An average payment of roughly $100 per vehicle. It's a nice round number, right? Looks great in a news sticker. And State Farm themselves note that the average payment is right around that $100 mark. But here's the thing. Whenever we look at averages with this kind of data, we have to be extremely careful about what it actually means for our own wallets. So the absolutely crucial point here is that average does not mean guaranteed. Please don't expect an automatic $100 check just because you're a customer. You could get significantly less, or hey, you could receive considerably more. It depends entirely on your unique premium and the specific percentage for your area. So definitely do not look at that $100 figure and just assume that's exactly what your personal check is going to say.
Section 1. The real math explained. Let's look at how this payout is actually calculated.
The true engine behind your specific payout is the 4% to 10% rule. State Farm has stated that the applicable dividend percentage actually varies state by state. It's going to range anywhere from 4% on the low end all the way up to 10% on the high end of your qualifying 2025 premiums. This sliding scale is literally what determines your actual personal dividend.
Let's see this math in action and keep it super simple. Let's say you paid $1,000 in qualifying premiums. At a 4% state rate, your dividend is $40. At a 10% rate, it's $100. Now, if you pay $2,000 in premiums, your payout could be anywhere from $80 to $200, depending entirely on where you live. And if your premiums were $3,000, well, you're looking at a range between $120 and $300. These are just examples, of course, but they perfectly show how your specific premium and your state dictate your money.
But keep in mind, there is a catch. There's a $10 minimum calculated dividend required for a customer to actually qualify for the payment. This is a really important technicality. If the math we just looked at results in a calculated dividend of, say, $8 for your specific policy, you will not receive a payment. It absolutely must hit that $10 minimum threshold to trigger a payout.
Section 2. Eligibility and payment timing. Let's find out who exactly gets paid and when.
To be eligible at all, you must have had a qualifying State Farm Mutual personal auto policy that was active at some point during the 2025 premium period. The calculation is based strictly on premiums from that specific period, which means it isn't simply a case of anyone who has State Farm today automatically getting a check. Your eligibility is tied directly to that 2025 timeframe. Now, when it comes to actually getting the money, payments are being distributed in waves. State Farm is using its established customer payment processes to send these out. So, if your neighbor gets their check on a Tuesday and you don't, please don't panic and don't start calling your agent right away. A different payment date than your neighbor doesn't mean you're excluded. Think about it. It takes a while to process 49 million vehicles. Patience is definitely key here.
Section 3. Why is this happening? Let's take a look at the financial performance behind the payout.
The company explicitly states that this dividend is the direct result of, quote, stronger than expected underwriting performance in 2025. In plain terms, their insurance results were incredibly strong enough that they're actually able to support returning a massive chunk of money directly back to their qualifying policyholders. It really just comes down to standard business performance metrics totally exceeding expectations.
Now, you also need to be careful not to confuse this one-time $5 billion dividend with another massive number State Farm is talking about right now, which is $4.6 billion in ongoing annualized savings. Those savings are the result of recent rate reductions averaging about 10% across 40 different states. So customers are potentially seeing lower ongoing rates and a one-time dividend check. But remember, they are two entirely separate things. One is an ongoing reduction, the other is a singular one-time distribution.
Section 4. Protecting yourself from scams. This is a really important warning.
Look, whenever this much money is flying around, scammers inevitably try to take advantage of the confusion. It happens every time. Just remember this simple checklist. Never, ever pay someone a fee to unlock or expedite your State Farm dividend. Never hand over your account passwords or your two-factor security codes to strangers on the phone or online. And whatever you do, do not click on suspicious text messages or email links claiming you need to activate your payment. A real dividend payment will never require you to compromise your sensitive account credentials.
Instead, you should rely strictly on official channels to verify your information. Log into your official State Farm account portal or use the app. Check the email address you officially have associated with your policy, and of course, keep an eye on your physical mail if that's how the company normally communicates with you. Safe, official tracking is the only way to go here.
Finally, Section 5, the recap. Let's do a rapid-fire review of the key numbers.
Number 1. The $5 billion total one-time distribution is absolutely real.
Number 2. It impacts over 49 million qualifying auto vehicles.
Number 3. You absolutely must hit that $10 minimum calculation to trigger a check.
Number 4. It all comes down to your 2025 premiums.
And finally, don't look over the fence at your neighbor's mail. Your payout is unique to you and your state's specific percentage.
The headlines everywhere might be flashing that big $5 billion number, but the real question you should be asking yourself as you log in your official account today is, based on my 2025 premiums and my state, exactly how much will I get? And more importantly, with State Farm returning this much capital directly to drivers, it begs a fascinating question. Will other major auto insurers be forced to open up their wallets and do the exact same thing just to stay competitive? We'll just have to wait and see.